No, for physical webinar guests, we're so excited. We're so excited to have Senator Paul Faraci joining us today. Straight out of Springfield. Yeah?
Yeah. Heading home. We're heading home now.
So we're excited to have you. We've got a good today. This is the National Money Smart Week. It happens once a week every April. And we're going to share some fun things to just give you a little more education and empower you with your finances. Because did you know that the research shows that if you learn a little bit about money, you'll actually be better with money?
It's a thing.
It's a thing.
It's a thing.
And if you learn something and teach others, you'll be even better at it. So we're going to all put our teaching hats on today. But first, I just wanted to welcome my dear friend and our state senator, Paul Faraci, and thank you so much. And Paul, you've been an entrepreneur, you've been a business owner, you've helped people start businesses. You know, do you have any tips you want to share when it comes to money and all things?
Well, yeah, thank you so much for having me. Oh, and happy birthday, Susan.
Thank you, Paul.
Yeah, we probably should all sing happy birthday at the end of this. No? Wouldn't that be fun?
I think it would be great. I think it would be great.
So I'm flattered. I'm honored to be here, and thank you so much for allowing me to join you. Yeah, I think so. If I were to, if I had one quick thing to say, not that it has to be quick, but I think it's really important for people to realize that it's never too late to be smart about money, and it's never too late to start saving and maybe changing some habits. And so even an old guy like me, can learn from people that have made mistakes and have not made mistakes. But I think it's really important to know, just because maybe your past practices weren't always money smart qualified, doesn't mean they can't be moving forward. And so that to me seems like probably one of the best pieces of advice I've received, and I think that I'd like to share.
Oh, I love that.
Thank you. Yeah, that's really great. That's impactful.
I agree
so
with
much.
that. Some of the information we're going to share today is actually coming out of the state of Illinois Treasurer's office, Mike Freric's office, and they just released some really good information about financial well-being. And that's exciting. So we'll be sharing some of that as well. So I feel like even though the realities of, people are hurting out there, right? It's hard out there on the wallet. I mean, there are some real pain points. There's also some glimmers of hope. There's good research that's showing that our children are actually better educated in financial well-being, and that now more schools are starting to add financial wellness to their curriculum. And that will really help those young adults as they enter the workforce and going into college. But I think what Paul said is something that's so very important, is that sometimes you think, like, I'm an old dog, that you have made mistakes in the past. I know I have. And sometimes those mistakes you're afraid can follow you. And that doesn't have to be the case. No. And I think that's really important to remember.
I would agree. Appreciate that. Thank you. Well, I think we're ready to get rolling.
We're going to get started.
I will let you all know, if you have questions, feel free to open up your mics and ask. But if you don't want to, you can type them in the chat. Our colleague Liz is monitoring the chat, and she'll let Susan and I know when there's questions that pop up in the chat. So I am going to share my screen.
And while she's doing that, I'm just going to say, Senator Faraci, thank you so much for coming on, introducing and helping us start this webinar tonight. We have 76 people that registered. And you know what, Paul? I think it's because they knew you were going to be on. I really think I'm going to give you all the credit on this one.
That's all right. I'll take it. Sure. I appreciate that.
Thank you for the good work that you're doing on behalf of our entire region, and just appreciate you so much, and drive safely on your way home tonight.
Thank you. Yeah, and I apologize in advance, folks, if my internet gets a little wonky, just from the travel. So please bear with me.
No
No, just be
worries.
safe, and we're gonna go ahead and get started, and feel free to jump in if you want to.
Yeah, absolutely.
Absolutely.
Oh, there's your screen.
Well, there's,
There you are. We have a screen for you.
it's a great
my
picture
God.
too. You had a great
Oh.
picture.
Oh, okay. If you say so, you're very
Yes.
kind.
It is. It's great.
Thank you
There's
so
only
much
one-
for being here. Pardon?
There's only one thing I dislike more than my picture is hearing my voice recorded back. So, all right, we'll get through it though.
Yeah,
Yes.
we will get through it, and you have nothing to be embarrassed about.
That's right.
I love listening to your voice. So thank you. Welcome. I'm glad that you're here. So let's get this party started.
Yes. Susan, share this.
Oh
I
my
love this.
gosh. So, I mean, like our founding fathers were so intuitive and smart. So Thomas Jefferson, if we would all adhere to this quote, never spend money before you have earned it, I would
Right.
say about 99% of our money problems would not be a problem.
I would agree. Absolutely. We should have listened back then.
I know.
Our forefathers, our grandparents, our great grandparents.
And that was very much a norm back in the day. I remember hearing that from my parents and with their parents, is that they were very mindful with their money. They didn't get ahead of the money that they had. They planned their purchases. It wasn't about quantity, it was about the quality of purchases. And I think that's something that today, more than ever before, with the rising costs, to remember the quality purchases. However, if we just don't spend money before we've earned it, that will help save us a lot of heartache in the
It will.
future.
Yes.
Thank you.
absolutely.
Thank you, Thomas Jefferson, for that one. Went back in the way back machine. It's still relevant.
That's a good one. Yes, it is. Very relevant.
So what we wanted to do with Money Smart is Money Smart Week was started with the Federal Home Loan Bank here in Chicago in 2002. And it was a way to raise awareness to consumers nationally about banking, credit unions, and about the benefits and just some money tips. I mean, we go through the holidays, and we all do pretty well going into January, February, or March. But here we are in April before we get into more spending season in the summer months, because we always spend more money in the summer. And this is a way to just empower all of us with more education, because if we know better, we're going to do better. So we're going to give you some tools and tricks. And we want this to be an open dialogue. So if you have some questions, feel free to ask them in the chat and we'll go ahead and address them.
And share your tips too. If you've got tips on how to save money or, tips on your buying powers, things like that, please share them with us. We want to know your tips.
So y'all can bank on us. We do love our credit union, but I have to say we love all of our credit unions. But I will say that if you're a consumer and you're not banking with either a credit union or a FDIC bank, then your money just isn't as safe. Your money may not be as convenient, and you're not benefiting from some of the rising interest rates for savings. And more importantly, from a security perspective, you're at risk. Why is it safer to bank with U of I Community Credit Union?
Well, your money is insured up to $250,000 for one.
There it is.
How much safer can you get? Right?
Exactly.
So, and you're earning money on your money. And we're going to talk about that in a little bit.
We created a hashtag. We're going to let you in on that in just a couple more slides, but we're kind of tickled with it.
Yeah.
And one of the reasons that we hear about it is if you're not wanting to bank, they're concerned about fees. Consumers are like, this is my hard-earned money.
Yeah.
And there may be fees to have my checking account, do deposits, withdrawals. And that doesn't have to be the case. And so this is where one of those, that's fake news. That's a myth. You can bank with us. We have really a no frills, no fees checking account. It allows you to deposit, do direct deposit. And you know what else it does? Can we talk about it?
Yeah.
The direct deposit. If Sheri gives me a check, I don't have to go to a bank to deposit it anymore, guys. I can take a picture of that check and it gets deposited in my checking account
Real time,
real time.
real time.
And that's what we're talking about. There are so much convenience and ease and safety and security now.
And there's no fees for that. Again, no fees. You should not have to pay to access your money or to save your money.
That's right.
So no fees.
I have a
Mobile-
question for you.
Oh, we got a question. Yay.
We had a question from the audience. What do we got?
Are we able to use any credit union to deposit money and it will go to our UIC account?
Okay, here's the question. Can we use any credit union like our credit union at the U of I to deposit money? So I'm going to let you answer that with the last one, because that just segues right into our shared branching.
Yes, shared branching is something we have. So you have access to over 5,000 brick and mortar branches across the country where you can walk in to a branch and deposit money to your UICCU account. That's better than Chase or Bank of America. Susan.
Amen. And what
right?
about that ATM network that we have?
Over 50,000 surcharge-free ATMs across the country as well. So not paying to get access to your money or deposit your money. This is what we're all about. And credit unions, this is where we're different. We all work together. So all these credit unions all across the country, we're working together for our members. We want to make your life easy.
We may be tiny, but we're mighty, and you guys get the benefit of that. So that was a great question. Thank you,
Yes.
Liz.
Money matters.
Money matters.
Money matters. Financial goals, whether you're setting short-term or long-term goals, setting those short-term goals really help you get to those long-term goals. So you're wanting to be able to make time to set those goals. A spending plan for life.
I want to talk about financial goals, because sometimes we get very bogged down about, you want to have a long-term goal of a house, or you want to have a retirement. And those are phenomenal long-term goals.
Mhm.
But again, in understanding Thomas Jefferson, not spending money we don't have, sometimes a short-term goal is just saving for that vacation that you want, so you're not having to put it on credit cards. So it's a combination of getting what you want because you're working very hard for your money, but breaking it down into understanding the long-term goals that you have. But don't deprive yourself. If you want to do something fun, plan it in a short-term goal as well. And I'll tell you, banking has gotten so smart, you can even create savings accounts for short-term and long-term goals.
That is so true. And if you have a UICCU account, you can do that right in your digital banking platform. You can open up those savings account. You have vacation, you've got Christmas, you've got, whatever it is you're wanting to save for, you can do that. And then you direct deposit those monies. You never miss it. And before you know it, you have your savings all set.
Yep, there
Right.
you go.
Decrease spending and increase income. Sometimes it's just a money thing, right? Just a money thing. And keeping your household expenses and credit cards, we have a lot of that, right? We've got our needs are huge right now with inflation. We're spending more money in the grocery store. We're spending more money at the gas tank. So we got to be mindful of that, and
Yeah.
be mindful of your credit cards, because credit's okay to use.
Mhm.
And we're going to talk about that in a little bit too. It's okay to use credit, but you got to use it wisely.
And one of the things to talk about is if you are in a spot where you are spending more than you have, then maybe it's time for a side hustle. Maybe it's time to decrease some of your spending. Again, we all have personal choice here, but know there are a couple levers that you can move, but it all starts with having a spending plan. Now, a spending plan is code for budgeting, but it's kind of like a four-letter word. So we ain't never going to call it a budget,
Right.
but we are going to call it a spending plan. We're going to talk about it. And the last thing that I think it's important for everybody to know, and for you guys to have so that you're telling your friends and family, is we're all about the no judgment zone here. And if you ever just need assistance, credit unions are here to help you. UICCU, we have financial coaches. We want to be your coach for life. And there is no shame in your game, man.
Yeah.
It is the worst question is the one that's not being asked. So if you have some questions, please feel free to ask, because that's the only way you're going to get the insights that you need to make change. And that's really what this is all about.
Yes, good point. And by the way, you can schedule an appointment from our website.
Talk about this.
On our website, you can make your appointments. Most of our member service reps meet by appointment only. There is actually an appointment scheduler for credit counseling. So check it out if you are looking to talk to somebody one-on-one. If not, we also have on-demand 24/7 access, and we'll share that with you here in a few minutes.
You know what I think about? I think about your physical health. And once a year, we're going to make an appointment with the doctor and go through all of your lab works and to see where your points are. But we don't do that with our money. And our money is the source of angst and sometimes physical problems. Y'all make a date with us. Let's try to figure out how we can save you some money and learn that there's money in money. So
That's right.
I love that tip
Yeah.
that you can come in and make an appointment with us.
Well, and I love an annual appointment with your money.
I do too.
Yeah.
I do too.
Or even maybe it's a monthly date with your money.
Yeah, I
Make
think we
it
should be
fun.
dating. Exactly. Because yes.
Scheduling time with our money. Grab a glass of wine or a beer, whatever your beverage of choice is, and sit down with your spending plan.
Well, and you know what, again, and with your partner,
Mhm.
no shame.
That's
We're,
right.
we're all
Yeah.
coming to things at a different level of understanding.
Mhm.
And the minute we start putting judgment on each other or blaming each other, that ain't no good.
No.
I mean, we're all trying to be better. So if we can be open and honest and free with each other and learn together, I truly think that marriages can be stronger as a result.
I would agree. And parents, involve your kids too. You know, because kids want stuff. And when we always are saying, no, it's not in the budget, we don't have it, but they don't understand that.
Gary, that's great.
So involve your kids in those conversations. When they understand the why, they're going to even help you. They're going to go to the store with you and they're going to say, oh, this is something I want, but I know it's not on the grocery list this week. And so I'm going to set it aside. I'm not going to ask for that because I understand why we have the grocery list, because we have this amount of money to spend. So make it a family thing, make it a family
I
affair.
love that. Money matters, families matter. And if we can just take away the shame and judgment and be open about these conversations that are not always easier, then we're coming at them together, and saving and having goals for short-term and long-terms are going to be so much easier if we're all on board as a family.
Absolutely.
I think that's a great tip, Sheri. Thank you.
Hey, Susan, can I add something, or I didn't want to interrupt?
No, we
please,
love
yes.
that. What you got?
So I'm not sure if this is working, but can you see? I don't know if you can see me or not, but it says I can speak. So I thought I'd
You
try.
can speak,
So
we can't see you, but you can drip your knowledge. We love it.
All right. Well, what I was going to say was, the importance of including children. And I've got a teenager now, but when she was getting allowance and she was getting money for birthdays, and she'd want to buy something, my wife and I said, you know what, you can buy whatever you want with your money. And this was something we did. I don't know that it necessarily works for everybody, but we said for every $1 you buy a toy or something you want, you have to put a $1 in for savings. And so ever since she
Love
was maybe 6 or 7, I think we start, because they had all those little toys that they had, and we'd say, yeah, you can spend $10, but you got to put $10 away in savings. And she's turned out to, she's now a 17-year-old. She's actually she's pretty good with her money now, and she's cautious and thinks about what she's gonna do. She doesn't impulse buy like I did when I was that age.
Yes, Paul, that's what you and Stephanie have empowered with your daughter is going to help her navigate her life today and in the future in a way that most Americans aren't there. So I love that.
Great. Thank you for sharing that. That's awesome.
So, okay, so let me understand it. So every $1 that she wants to spend for a want, you encourage her to save the same amount in savings.
Yeah, it was more than encourage.
Oh, I love.
It was a requirement.
I like that.
Good job, Dad. I
Yeah,
love that.
good job.
It got her excited to see the benefit of money that grows. Oh,
Yeah.
girl, we're getting to your word. Are you ready for the next one? Next slide. Are we there? Oh,
We're not there yet, but we're going to talk about, this
Yeah.
is our spending plan.
Yes.
So this is what we talk about instead of the 4-letter budget word.
Yeah, we don't want to talk about that.
We don't want to talk about that. But the spending plan is really taking a look at your income and breaking it down into 3 little buckets. Your needs, your wants, and your savings. And when you're able to do that and get as close to that 50-30-20 as possible, we get it, especially if families, you have kids, you've got extra expenses with childcare or at school expenses. So sometimes your 50-30-20 might look like 70-10, whatever, 20 or, so your wants might be a little bit more than your savings. Sometimes savings will take a hit. Whatever you do, try to save something, even if it's $5 a paycheck. Try and save that.
And why is that important? It's important because you're building a muscle. It's like what Paul did with his daughter. He's getting her into a habit of saving money.
Yes.
And that's where we Americans have gotten a little sideways. We're in the habit of spending money, but we're not always in the habit of saving money.
Exactly.
And saving money is exciting, especially when you get started. So we're not worried about the amount. If you have the ability to save 20% of your income, more power to you. We just want you to start with something. The other thing in this monthly budget, for those of you, Paul, you should not be seeing this because you're driving, but it shows about all the different income. And this family gets Aunt Sally. Aunt Sally is giving them $10 a month. I got to tell you, if you got yourself an Aunt Sally, I didn't have an Aunt Sally, you better kiss that Aunt Sally the next time you see her. And remember, that is income that you can use for a budget. That's just not free money.
And think about maybe taking that $10 from Aunt Sally and putting that in your savings.
There
Make
you
that
go.
your savings deposit.
And Aunt Sally, knowing that you're saving her money, will be very happy.
Yes, she will. Absolutely. Absolutely. Pay yourself first.
Okay, I love this slide because we're going to talk about compounding interest in a minute. And that's my favorite for Sheri to talk about because I've never seen a woman so excited about talking about compounding interest. We're going to get there, but here's why. You manage your money better if you start to save. What saving does is also bringing awareness to your spending. So pay yourself first. We talked about it. I remember being a young family and they're like, pay yourself first. And I'm like, I can't pay the electric bill. How am I going to pay myself first? It's because I never understood the concept was really trying to create a habit of saving and self-awareness. And that's really what happens when you start to pay yourself first. You save towards identified goals. You feel good about that. Guys, when you spend money on something you want, you get a dopamine hit. If you save money for a goal, you get a dopamine hit. You're still going to get that same sort of adrenaline and excitement. It's now doing it in a different way, which is a much healthier way. And then you start having money for emergencies. But I am excited to have Sheri talk to you about compounding interest.
I love
Sheri,
compounding interest.
I know you do.
Compounding interest is just making money on your money. And that's our new hashtag.
Hashtag making money on your money.
Making money on your money. It's taking that $5 a paycheck, putting it in your savings account, and it's earning interest. The credit union is going to pay you to keep that money in your account. And the longer you keep it there, the more money you're going to be making because it's building upon itself. It's compounding, it's growing. And when you're in a position to increase that direct deposit, put a little bit more in, then you're making more money on your money.
Making more money on your money.
Money on your money. And that's how to win with banking. And this is
100%.
this is another reason why keeping it under the mattress is not good for you.
That's right.
Because you can't make more money on your money if it's sitting under the mattress.
And guess what? There's money in money right now.
There is.
Because the interest rates are rising, that means there's more money for you to have in compounding interest, to make more money on your money. So savings accounts have a higher dividend or a higher ability to make money. Money markets, certificates of deposits, otherwise known as CDs, are other ways for you to put aside to help you save and make money. Do you want to share a little bit more about that?
Yeah, let's share a little about.
I do, because sometimes consumers worry about putting money away in a money market or a CD. And they see words like penalty. And there is a bit of a discouragement to take that out, because we want you to put it in there to save it for you, but you will always have access to your money.
Always, always. And if you're looking at, I want to make more money, and I can do that if I put my money into a CD, always know that you can access it. If you have an emergency and you need that money, then you can take it out. We're not
realize all the interest by doing so, but you're not going to lose either.
Right. Exactly. You still have access to your money. It is not locked into a safe.
And
it
does sometimes seem a little complex.
Sure.
So we're just trying to simplify that a little bit, is to help you with that. Savings accounts to have some liquid money for a $500 emergency fund, have some liquid money for a $1,000 emergency fund. Once you start getting over that, it is a really savvy thing to start considering money market certificates of deposits and take a look at the interest rates, because good grief, I got to tell you, I don't know if we should be talking about this, but we're going to talk about it.
We're going to do it.
Starting May 1st, we are going to have some interest rate hikes that are kind of bonkers. They're really amazing. And when we share this recording out, I think we'll be in a position to give you guys first knowledge of some of this next week. But keep your eyes on that email, because let me tell you, you want to start saving some money and get excited about seeing your savings
grow.
Yes, and make money. Go ahead, you got to say it.
Making money on your money.
We're going to give you some really exciting news next week, but it's going to hit on May 1st. Absolutely. Also, the other thing about paying yourself first is in retirement accounts. So if you're with an employer with a 401k or a 403b, take advantage of those opportunities and know when we talk about the 50, 30, 20, this savings counts towards your 20% of savings. So if you're out there and you're already putting money away in a 401k, celebrate that. Absolutely. You are saving for a big future goal, and that's something to be celebrated.
And the earlier you start saving in those retirement accounts, the better you will be towards retirement. I know that's something that nobody told me, and I really didn't start contributing to my 401k in my younger years, when I was in my 20s.
Same, me too.
It's not too early to start saving towards your future retirement.
And something that Senator Faraci said that I want to reiterate here, and it's not too late. So if you haven't started, today's a great start. Tomorrow's a great time to start. It's never too late either, because that, I think, is really important, that sometimes we beat ourselves up and we regret decisions in the past, but this is all about moving towards the future and knowing better today and making different and better decisions moving forward.
Absolutely. Good point, Susan. Good point.
Can I jump in again? I'm sorry.
No, we love it.
Ahead.
So someone taught me early on, I was a teenager, the rule or the law of 72. Have we talked about that yet?
No, but please do.
Okay, so what they told me, and this was back when interest rates were a little higher, so it was a lot easier to do the math. But if you can get, let's say you can get an interest rate of 10%, which is pretty good, and you use the rule or the law of 72, that's how long it takes. So you take 72 divide by the interest rate. So that's 7.2. That's the number of years it would take for your money to double at 10%.
Mm-hmm.
So if it's 5%, if you're earning 5% and the rule of 72, well, that's more like 15 years, that's how long it would take your money to double. But understanding some of those tricks
I
and
love
having
that.
some
Yeah.
fun with it makes the investing side a little more interesting. Now, of course, I love spreadsheets, so that's even better. But that rule or law of 72 really got me as a teenager kind of interested in understanding compounding interest and how your money actually can work for you.
Yeah, Paul, thank you for
Yeah.
that. And I
Yes.
think when we share this recording,
Mhm.
we'll do a little research and share a little bit more on the rule of 72, although you did a beautiful job with that. That's
Absolutely.
really good knowledge. And you're right.
Yes.
It's kind of, it breaks down the complexity in a very simple way. It shows how that you make more money on your money.
You make more money on your money.
Thank you for that. That's a good
Yes.
one.
Appreciate that.
All right, so we want to talk a little bit about borrowing because we take it for granted. People come in every day, but let's face it, most of us are not applying for a loan on a daily basis.
No, it is not a.
Even a car loan, you might do that once every 3 years, 5 years, 6 years, but that, who remembers how you did that 3 years ago?
Right.
So we want to talk a little bit about borrowing. We want to give you a little bit of tips on that as well. And just at its most basic, it's just borrowing means you're borrowing money for things that you must pay back. And that is something to remember, that you need to fit that into your 50-30-20 spending plan as now as a need, as a payment that you will have to pay back.
Absolutely. And remember that, while credit is convenient, you do have to pay it back. You can pay it back over time, but if you don't, then it can affect your future life. It can affect your future buying power. So really being aware that when you're borrowing money, you have to be able to pay it back.
Because if you don't, it will impact your credit score. Now, we've talked about credit score on other webinars. We've got information on our website about that, and we'll talk about more in the credit score. But how it can affect your employment, your housing, and your insurance is sometimes your new job wants to pull your credit and they want to see how your credit is. And that can affect your potential of getting that dream job. It can affect that next apartment you want, and it can affect how much you're paying for your car insurance or your homeowner's insurance. So although credit can be convenient and sometimes easy to access, especially if you haven't gone south with it, you got to remember, you got to pay that back.
Absolutely. And you don't want to overextend yourself because life does happen. And you want to make sure that whatever you're borrowing, it fits into that 50-30-20 somehow.
Sheri, can we talk a little bit about installment loans, credit cards, home loans? And we're going to compare that to the rent to owns and the payday services.
Okay. Yeah, let's
Okay.
talk about that. So installment loans are loans that, a personal loan, a car loan. It's a loan that has an end date. You're going to pay it off and it's done, over with. Credit cards and home equity lines of credit are ongoing. They are revolving credit. So this is two types of credit that you'll hear about when we talk about credit scores, are installment credit and revolving credit. And credit cards and home equity lines of credit, anything that's a line of credit, it's you use it and you reuse it, you pay it off, you use it, pay it off. Those compared to rent-to-own services and payday loan services, not all of them are bad. But one thing you have to be very, very careful is those rent-to-owns, for instance, a 60-day same as cash type program. When they say 0% interest, it is only 0% if you make every payment on time every month for those 60 months, 12 months, whatever that term is.
And I'll share something, is they're not going to calculate that payment to pay it off in 12 months. So you need to remember, you need to know how much you spent and divide it by that term and make sure you're paying enough per month so you don't have a gap at the end. Because if you have a gap at the end, it gets fully assessed a very high interest rate.
And you will pay the interest for the full amount.
You can, not all, but you can.
So be very careful about that. Read the fine print.
So we're here to say, this is a savvy audience. You're here to get more education. So if you are encountering one of these, like Sheri said, they're not all bad, but it is buyer beware. Because this is one of those situations that as a consumer, it is on you to really look at the fine print, ask the questions before you enter into some of those situations. Oftentimes, you can go to your credit union, get a personal loan, which is an installment loan. Know that it starts in May. It'll be over, in 2025. And you know that that set payment is going to be one that you can afford to pay without the worry of a high interest rate.
And did you know, Susan, that credit
What,
union
Sheri?
installment loans
let's
are
talk
based
about
on
that.
simple interest? And what that means is you have a monthly payment of, say, $100 on a personal loan. If you get paid bi-weekly, you can make $50 payment every payday, direct deposit onto that loan. Every time you make a payment, your interest starts over. So you're never paying interest on anything but the balance that's in there. So every $50, as long as you're making that $100 payment by the due date, then you are golden, and you're going to pay less interest over time, and you're going to pay the loan off faster. So that's something also to be aware about credit unions is installment loans are based on simple interest. You can pay them off faster with less interest.
I love that. And so your loan application, it's called underwriting. So it's a team of people that are there to try to help you get your loans, right? But they're looking at the capacity. Could you afford to pay this back? How much money do you have coming in? What's your character? And character means, have you paid off your loans on time in the past? And is this loan have a collateral like a auto or a home where something can be used if you default on there? Here's the deal, guys. Life happens. If you're going into a loan application and in the last several years, you might have had a couple of hiccups.
Mhm.
That is the time to partner at the start of that loan to share your story on what happened. Now, we always say our members are people first, numbers second. And we want the story. We want the narrative. We know COVID was hard on a lot of us and a lot of families, and we want to help you. It helps us help you knowing your information.
Absolutely. And sharing that story with us is really important. So we can, is part of our relationship building with you. And, so if you're applying online, there's a comment section.
Yes.
Feel free to put your story in those comments. Let our underwriters know who you are and how things happen to you.
That's right.
Because we want to be a part of rebuilding your story.
Amen. I love that.
I have a question from the audience.
All right.
All right, this is Marla. She says, my son is starting a new job in June. Retirement is self-managed with a 401k 7% match. He was wondering how much he should contribute. My advice to him was at least 10%, and it could always be changed. What is your thoughts about what contribution should be?
Marla, you're asking a really great question about your son, and I applaud that you and your son have the relationship that he's talking to you about that. Sheri and I are certified financial coach, but we are not investment and retirement trained. That being said, we have a great team here, and at the end, I'm going to give you our email, and I want to connect you to our team. And we have a group of advisors that are excellent when it comes to all things 401k, but I don't want to get out of my lane because we got ladies that know that lane a lot better than I do.
So when we talk about being financial coaches, we really help with debt management. But we have a team of experts, like Susan said, that are wealth advisors.
Yes.
That's their specialty, and they can help you with that. So we will definitely connect you with them.
Yeah, Marla, you'll see our email, and then can we capture okay, we're capturing your information so we can follow up tomorrow and connect you to a really great resource. But I love that. Any other questions? I think we can advance it.
Nope.
All right, cool.
All right. Building your credit. Again, like we said, life happens, right? And whether you're just getting started or maybe you're trying to start over, rebuilding your credit is really important. One thing to do is, remember, we talked about installment and revolving credit. Having a mix of that in your credit is really important. Applying for a UICCU credit card, it's a low interest rate. It's credit unions have to have lower interest rates. We can't have
We're
predatory
capped.
lending.
Yeah,
We're
we are
capped.
capped. We are capped as an industry because we were created to help consumers save and make more money. So our interest rates are capped. You're not going to see them. I can't remember the exact interest amount, but as an industry, we are regulated to have really great rates. But I got to tell you, don't trust us, but compare us. Compare us to others and see for yourself. But we've got a variety of credit cards that are available, including a secure credit card.
We have yes, if you're trying to rebuild your credit and you don't qualify for a credit card right now, you can do a share secured credit card. So you are getting a credit card based on an amount of money you have in your savings account. And as you can charge up to that amount on your credit card, pay it off regularly every month. As you build that credit by using that secured credit card, it will put you in good position to get a regular credit card.
Right.
And so this is another way we want to help you succeed. And that secured credit card is really beneficial for a lot of people. But remembering, when you charge something on your credit card, pay it off. Don't charge it if you can't pay it off that month. And here's why. You want to use your money. You don't want the bank to use your money. You want to be able to use their money for that period of time. So keep your money in your account, charge it on your credit card. When the bill comes in, pay it off. This is how you also build a good credit history. Keep your debt levels low. So try to use less than 30% of your available credit. That's really important as well.
Because if you go over 30% than your limit, it's starting to hurt your credit score.
Absolutely.
So you really need, if your credit line is $1,000, don't charge more than $300. I mean, it's as simple as that. And pay it in full every month, because it goes back to what Sheri just said. You pay it in full, you're going to keep your debt levels low. The other thing we do know, and this is the reason why we really encourage everybody we work with to get a $500 emergency line, emergency savings account for those emergency times. Because if you don't have it, you're going to use your credit card. And if that happens, let's not judge ourselves. Let's look at the amount and put a game plan together as a short-term goal to get that credit card paid off as quickly as possible.
Absolutely. And one more quick tip. If you have a credit card and you pay it off, keep it open. Do not close your credit cards.
Yes,
That credit history is
Yes.
really important.
Sure is.
You need that credit history because that's a big piece of your credit score.
Mhm.
So pay off those credit cards. If you don't want to use it anymore, that's fine. Use it periodically just to keep it open, because the creditor will close it eventually.
Mhm.
So you want to keep it open, but use it, pay it off.
I love that. Great tip.
Got a question for you.
Oh, we got a
All right,
question.
Great.
Are credit unions subject to bail-ins?
To what?
To what?
Bail-ins?
A bail-ins. Did you mean a bailout? Because I'll tell you, to the best of my knowledge, a credit union's never been bailed out.
No. Mm-mm.
We are insured by NCUA up to $250,000, but I'll tell you, credit unions predominantly are lending within the community that they serve, and we are consumer based. So when you put your money in a savings account or a CD account and you're earning interest, we're lending that to your neighbors for their car loans and for their homes too. And it keeps everything very local. we're not investing in risky startups or any other types of things that put you at harm's way. So historically, credit unions have been very safe and a very sound place for consumers to have their borrowing and their saving.
Did that answer our the question from our listener?
Yeah.
Okay.
All right, guys, we're in the home stretch. So it's Money Smart Week.
It is Money Smart Week. It's actually, we're celebrating it all month,
Oh,
right?
I love that.
Yeah.
Yeah.
We're going to celebrate it all month. We're going to make this Money Smart month. We're getting a clear picture of our finances.
And today was a start. Y'all, you guys, celebrate everybody who's on this call. You took time in your evening to listen and to learn, and that deserves to be celebrated. And hopefully it removes some worries or angst, and you're starting to get clearer or curious about getting clearer about your finances. And that is a big start about being smarter with your money.
Absolutely. Remember that your monthly bills, I can't even talk.
It's
Blah,
fine.
blah, 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 blah. Remember, your bills can impact your future goals. So try and keep track of your spending. Using that bank app, if you aren't a credit union member, but wherever you are, wherever you bank, if they have an online app, use that.
Yeah.
Use it to your benefit. Keep track of your expenses there. Get set up alerts when you're every time you're spending money, so that
Or put
it's
an
top
alert
of mind.
on your checking account. So if your checking account goes under $100 or $50, you're alerted to that. You guys, there's so much savvy technology out there that is at your fingertips. And one of the things that Sheri and I preach is put your automatic payments for your minimum amounts in every month. I got to tell you, that hit me. I have a date with my money. I write checks old school. I know I'm old school. And I actually write all my bills out because it just helps keep everything front of mind. Well, guess what? We had a family emergency in November, and I got off my cadence and I missed a payment. And it gave me such angst and stress. And I'm like, oh my God, I didn't practice what I preach. Now everything's on auto payment, because you know what? Even though you're on top of it, life does happen to the best of us. And if that automatic payment is taken care of, it won't take you away from a loved one or whatever crisis you're managing at that moment.
That's a great tip, Susan. That's awesome. Thank you for sharing that.
Oh, and by the way, our banking app is super legit, guys. It's #1 in the area. And I'll tell you, if you use it, you're going to love it. And you can remote deposit those checks from your friends and families, and checks that you come in and use them like in real time. You can do it in your pajamas. It's amazing.
And Susan, the only thing you can't do on that app
What?
is get cash.
Oh.
And guess what? We've got ATMs for that.
Yeah.
You never even have to step foot in a branch if you don't want to.
I mean, we love to see you, but you're right. You don't ever have to come see us.
No. Oh, and you know what else you can do on that app?
What?
You can get your credit report. You can get your credit score.
Mm.
And we have free credit monitoring.
Oh my
all
gosh, that's right.
Free to you in that digital banking app.
See, bank on us. I mean,
That's
we're
right.
here for a reason. And I gotta tell you, that banking app with the financial education in there, helping me identify and monitoring my credit score. I just bought a car and I was able to simulate what my payment would be
Yep.
before I committed to the payment.
Mhm.
And that was the bomb diggity right there.
And it'll also tell you what it's going to do to your credit score.
Yes, it
When you
did.
do that.
It did that too. Yeah, that was good. All of that from your phone. So you can just geek out on your money right there on your couch.
How fun is that?
How fun
right?
is that?
So we're still helping you get smarter with your money. We've got 24/7 access on our financial wellness page. Got a great financial wellness assessment. You can take this 5-minute assessment. It will guide you to resources specific to your needs based on the answers to those questions. You can do that at any time at your convenience.
And it's 24/7. So if you can wake up at 2 a.m. and you're like, how am I doing with my money? Take the financial wellness assessment. And again, guys, the way that helps you solidify this knowledge is to educate others. So feel free to, share some of these with your friends and family as well. But, if you want a person, and I love me some people, don't forget, like Sheri said, on the website, you can sign up for one-on-one financial coaching. It is no judgment. There is no shame. We are here to help you realize your goals. That's what we're all about, is helping make your fantastic future even brighter and better.
That's why this financial wellness page, whether you're a member or not, is you can access it.
That's right.
Because that's what we're about. We want to help you with your financial life.
Well,
in this
we
fun
know
way.
that if families are healthier financially, our communities are stronger and healthier as well. And that is a mission of the community, of the credit union. It's part of our do more good philosophy.
Right.
And we want to do more good for our team members, for our members, and I believe our future members, because eventually I think everyone's going to become a member.
I would think so. Yes, because we're fabulous. All right, guys, that is the end of our session tonight. We really appreciate you joining us. Susan and I, this is our contact information. This recording will be sent out to everyone who registered for the webinar. We will probably wait till we have some really great information to share with you.
It'll probably be
before
in
we-
about a week.
Yeah.
I'm thinking in about a week, but
Yeah.
you guys are going to be the first to know some of this exciting savings
Absolutely.
information.
Yeah.
To make more money on your money.
Make more money on your money.
Hashtag make more money on your money. Senator Paul Faraci, oh my gosh.
Appreciate you so much.
Thank you.
I
Thanks
can't
for-
be on both for some reason. Thank you for having me. I really appreciate it.
Well, and thank you for sharing some really great wisdom. And I really loved what you talked about from an investing perspective and the wonderful tips that you have taught your daughter that you have seen the success with. I love those stories and thanks for sharing.
My
All right,
pleasure. Thanks so
everyone.
much.
Have a great evening, and we will see you next time.
Bye, everybody.
Bye-bye.
Happy April.